ago, we did the annual, a full reval, which was only a couple years ago. And we did that because, just to kind of catch up to where we are now, we did that because the state ordered us, the town, to do that. And we did a full reval. It was very costly to do that. It was not done for 36 years. And that's one of the reasons the state ordered us. There's several markers that the state looks at, one of which is the length from the last time that you did a reval. 36 is a very long time. The other factor was the ratio. Our common level ratio was at 24%. That means the assessments were only 24% of actual market, which is where we're supposed to be at 100%. And there's another marker that is kind of technical, but it's the coefficient of deviation, and that just means that how skewed the assessments are from each other. And the marker is 15, and we were at an 18. So that's, again, the third marker, which is why the state ordered us. So many people, when I sent the letters out for the new inspection area for the annual reassessment, many people were saying, oh, we just did a reval, why are we doing this now? So the reason why we're doing this now is the annual reassessment program is a program that is it's regulated by the state. There's rules and regulations on how you do it, why you do it. But it's a program where the town can keep annual maintenance for the records, so that we don't have to wait many, many years and do a full reval again. But in order to do the annual reassessment, you're only allowed to skip 1 year after a full reval to start it up. So that's why we're starting it. I did skip 1 year to save a little money. We skipped 1 year. Now we're starting. This is the first year of a 5-year cycle. It's a 5-year cycle. It doesn't mean it ends in 5 years. It can go on continuously to continue to maintain. But the 5-year cycle refers to how many times your house will probably be inspected in the 5 years, because we do 20% of the town every year. So a lot of people got the letter and said, oh, I was just inspected 2 years ago, why me again? And the reason why you again, you just happen to be in the area that I selected. I have to do 20% of the town every year. I started with block 1, counted how many I needed to do. It took us to roughly block number 71, perhaps, maybe 70 point something. And that's why, if you've already had an inspection, why another one so soon? Because I had to start somewhere. Also, it was 2 years ago, but in those 2 years, a lot of houses have had changes. There's been people buying and selling and flipping. There's been additions and other things happening. So even though it was 2 years ago, there is still a lot of change that might happen. This helps keep the record up to date. Again, 2 years ago, we didn't get as good of an entry rate for internal inspections because people were still fearful of COVID at the time when we did that. So it does help that even if they were in your house 2 years ago, it's not as essential, but there were a lot of houses that we didn't get into because people were still fearful of COVID. So it helps us to keep up to date. Regardless of if you have an inspection or not, all of the values for all the properties in town are going to be reviewed based on the market and brought up to 100%. It's not just the houses that are being in the 20% area. It's all the properties, commercial properties, residential properties, everything will be based on the market. So that's basically where we're at, but I'd like to field questions if you have them.
Joe DeSenza, 321 South Store Avenue. I want to thank you for your time tonight. I have a couple of questions. Do you know how much the original, the full review was 2 years ago?
In terms of what, money or how many houses you got to?
How much money? What do we spend?
$300,000. The council telling me.
Yeah, it's about 3.
And what is your estimate for this first phase?
The inspections, it's about In addition to the normal cost of my office, it's about $35,000.
Oh, it's a big savings. It's like half, a little more than half.
Yeah.
Which isn't bad.
Yeah,
So
5 years.
Yeah.
Also, the council, does that $300,000 include the tax maps?
Yeah, I got up at the last meeting and expressed the opinion that maybe we should wait. But now understanding the full circumstances, it does make sense to me that we do it and save that money, not extend $300,000 at one time. It's a lot easier than digest $35,000.
It does allow to spend, a small amount every year rather than a huge amount.
Yeah, and the program itself is designed to try and keep everything equitable to everybody else. I mean, a lot of people took a big hit, and a lot of people took a reduction, and everyone gets very happy that, the people that got a reduction, they made out, but, if it's 30 years in between, does that mean you were overpaying for 30 years? I can tell you in my own case, I bought somebody a car, maybe two, after all that time. And it's unfortunate, but this way it'll keep everybody in check.
I also wanted to add, in addition, in over 36 years, so the last reval was in 1986. Over 36 years, different parts of town and different segments of the market changed at different rates. So, like warehouses in 86 weren't worth very much. Now because of Amazon and the other delivery services, warehouses are gangbusters. And the result of that was when we did the reval, we were at 24%, but the commercial properties actually went up 500%, whereas residential went up 300%. That means for I don't know how many years, the commercial properties weren't really paying their fair share. And it's really great when the commercial properties, not I mean if you're a business owner, it's not so great, but the commercial properties, like those warehouse properties and things, they don't have kids in school, they don't have students in the system, and yet they're paying probably the most taxes, certainly more than any, one homeowner in the town is paying. So it really helps to keep those values up to date. And, I don't know how long it had been skewed like that, but, that's a disservice to residents.
The other gentleman was first, yeah.
Yeah.
Dominic Musto, 50 Lewis Avenue. I also want to thank you for your presentation this evening. Unfortunately, I don't share the opinion that the phased reval program is fair and equitable or cost effective. Just let's get to the cost. You said it's $35,000 to do the first 20%, and there'll be 20% the following years, so that in 5 years, 100% of the properties will be reassessed.
Right.
So 35 times 5 is $175,000 in 5 years. And if you continue for the following 5 years, it's another 100, well, probably more than 175,000 because of labor rates and inflation. As an alternate to the phased reassessment program, did you consider reassessing the properties once every 10 years? Now I know the last time we were reassessed in 22 was 36 years prior. That's egregiously wrong. What has happened in the community, the cost to do the reevaluation after 30-some years, I would expect would be enormously high. And I think it's specious to say, or base any current cost estimates on the reevaluation done after 36 years. If we reevaluate it once every 10 years, we wouldn't be seeing a $300,000 reval cost. Now, that's fair and equitable, so I don't think it's cost effective. Fair and equitable. Don, you said that I'm in the first 20% to be reassessed.
Okay. To be inspected. Everyone's being reassessed.
Okay. That I don't understand. So the 20% is going to be inspected and reassessed. The 80% are going to be reassessed but not re-inspected.
Okay.
how is that? If, for example, let me just use an example. If the value of all the property in the first 20%, of all the property is, let's say, $1 million. I know that's low, but let's just use it as an example. $1 million as it was reassessed in 2022. And this year, the 20% would now be reassessed at, let's say, $100,000 or $1,100,000, a 10% increase. So all of those homes in the 20%, let's just for the sake of this discussion say, their reassessment value goes up by 10%.
Mm-hmm.
Do you use that as a means of determining how much the 80% of the non-inspected properties will rise?
No. So the inspections are to keep the record of the houses up to date. And they get out of, let's say, not all things, improvements in houses need to require permits. So it's very hard to determine if people are upgrading their homes or other things if they're not pulling permits on them. This helps to keep the records up to date so that the houses can be evaluated with like houses that are similar types of houses, similar condition houses, and things like that. I don't do inspections, and I'm only comparing homes that are similar to each other that are sales that happen during this year. So I'm not looking at the changes that, if I make changes to the 20% of houses, and those changes resulted in, I don't know, 10%, as you suggest, that doesn't mean the rest of the neighborhood, the rest of the town changed 10%. Because I'm not doing it that way. I'm trying to make sure that the record cards are correct so that I can compare everybody's house to similar houses that have sold during the year. That's how you determine what the market is. So ranches against ranches, colonials against colonials, and I might not necessarily be comparing you to the next door house if it's not the same type of house. That's not going to be the same market as your house. So it's not how you're saying.
Okay, I don't think I followed all of that.
Okay. So to determine the market value.
As an example, let's suppose it's 20% of the properties that are to be re-inspected, reassessed. You have house A, certain house, whatever it is, a ranch, a colonial. And in one of the 80% of the properties not re-inspected, you have an identical house. There are identical houses. And the one that is in the 20%, because it was last re-inspected and reassessed 2 years ago, its market value, let's say, increased in the past 2 years by whatever, 10%. Is the identical house in the 80% that was not re-inspected going to also increase by 10%?
Yes. Yes, because I'm not comparing assessments to assessments. I'm comparing assessments to sales of homes that have sold within the last year.
Okay.
So it's a market value.
Dawn?
Yeah.
Is what the assessment, when you're coming in and doing a physical, my understanding is it's more for, I want to make sure that if I have on my record card, I have a 3-bedroom, 2-bath house, that I'm going into a 3-bedroom, 2-bathroom house.
Yeah.
And its general condition is at market, above market, or below market in terms of just condition. It's a wreck, it's good, that type of thing.
Yeah.
And that's all you're really doing when they come in the house.
Yeah. It takes about 15 minutes to do an inspection, and they're just checking that what we have on record is what your house represents. It should be, it's a 3-bedroom, 1.5 house with an unfinished basement, unfinished attic. We just want to make sure that that's what we have.
Okay. I think you've answered my question. Let me tell you what I think I heard.
Okay.
Coming in here, I was concerned that the 20% of properties that are to be re-inspected and reassessed would most likely see a higher reassessment, because I guess real estate in the past 2 years has risen. And the 80% would stay at the reassessed value in 2022. I thought that would be unfair, but that's not what you're saying.
Correct.
So my understanding of what is correct. Of what you're saying is correct. Okay. Now, let me get back to the cost issue very briefly. Can I ask, had you considered, before you decided to voluntarily enter into this phased reassessment program, did you consider doing one reassessment every 10 years, not every 36 years?
I didn't consider it because I'm not the one dictating what I do. It's the council decided
So Mayor and
they
Council,
would like
did you approve of this phased reassessment program?
Yes,
Did you consider
yes,
reassessing every 10 years as an alternative?
yes, but you have to look at it from another standpoint. When they did the first assessment, they did not have 100% hit, which means that they didn't get into every single house. They think maybe they got into enough to make a broad-based assessment, but when you actually kind of need that consistent rolling to just basically kind of even out the field, that now you've gotten everybody. At this point, after 10 years, they're going to find a way to get into your house to make sure that you're there and what you have on the record card is correct. But right now, my bet is it's a hell of a lot closer than what it was. Is it 100% accurate? It's better than what it was, but I think that to let it go another 10 years, you're only building in a greater standard deviation and more of a chance for it to be out of whack. You're better off doing it like this because it's fair it's fair for everybody in town. It just is. Because if you went another 10 and you were messed up right now and you were paying way too much, you either have to go for a tax appeal or you're going to have to wait 10 years. This way, they're going to adjust, but the most you're going to go is 5, and then after that...
All right, you have a logic to it. I understand that. That's good.
Well, can I also say on top, the ordered reval was all supposed to happen a couple of years before it happened, but it was extended because of COVID, because I think you're supposed to start...
we were supposed to start, I think,
20.
2 or 3 years earlier than what we actually did.
And so the state tax, the Treasury, allowed for extension to get past COVID. So that contract was negotiated before, a couple of years before it happened. I can tell you now that I couldn't get a company to do it at the price that they did it. It's much higher now. In the state, many towns now that have been ordered for revals are doing the annual reassessment because it is a savings for the town. Even if you multiply it out, you say over 10 years. But there's other cost savings involved with that because it cuts down on appeals, especially commercial appeals, which are very costly. If the town loses money in appeals, it only goes out of the municipal portion. The school doesn't pay it back, the county doesn't pay it back. It's pretty costly. And if you go year after year after year without being able to do maintenance on your record and your ratio declines, in an up market it declines every single year, you're losing other money than just the cost of the inspection.
Okay. One more quick question and I'll stop filibustering. Hypothetically, let's say year number 3, 27, 2027. There's a national recession. All home prices are down.
They go down.
Everybody everybody.
Goes down.
Okay. I'm walking away with a much better understanding. Thank you for the time.
That's why we're here.
I just want to tell you, so in Somerset County, where I'm the deputy tax administrator of the county, we have 21 towns in Somerset County, 16 of them do annual reassessment. Basking Ridge, or Berners Township as it's actually called, has been doing annual reassessment continuously for over 30 years. And they have some of the best numbers in the state. And I wouldn't bore you with all the numbers, but if you look up any parameters that there are that towns judge themselves by or counties judge themselves by, the parameter is Somerset County because they do so much annual reassessment work. Their numbers are so good every year.
Okay, thank you again.
Just as a quick question for you.
Yeah.
What are our neighbors doing? All of them. Denellen, any of the other ones that you know of?
Well, Denellen, I'm an assessor in Denellen as well. I started there a couple of years before here, and they were ordered prior to the year before you and did the whole reassessment maybe 2 years before Middlesex. They've been doing the annual reassessment since then as well. The other town that's doing Piscataway, they've been doing it for about the same amount of time. Unfortunately, in Middlesex County, there aren't as many towns doing the annual assessment, but they also have many, many towns that are now doing revaluations because they also didn't do revals for many, many years. Other towns also got ordered by the state, that didn't necessarily want to do their revaluations, but they've had to. And a lot of towns, the state is now has a lot more towns on the radar, and towns know that it's coming, they have to do the reval, and a lot of them are doing the annual reassessment because it does help maintain the records just better than other systems that are in.
And it's used in state funding formulas.
The other thing also is it's nice to say, oh, well, we'll just do it every 10 years. In 10 years from now, this isn't the council and mayor that you're going to have. Maybe in 10 years from now, it wouldn't be politically nice to do a reval in 10 years from now. So that mayor and council will say, maybe we'll do next year, maybe we'll do next year. And maybe 36 years from now, we get to do it again.
Exactly, and that's how you get there.
And this kind of stops that procedure from happening.
Okay.
Dave Polakevich, 240 Hazelwood. Just a few questions. When the reval was done, earlier you cited figures. You said the residential values went up 300%, commercial went up 500. Somebody at one of the council meetings, or maybe it was Mayor Matt, made a comment that through the reval, the tax burden was going to be shifted in Middlesex to the commercial properties. Is this reassessment program going to shift the majority of the tax burden back onto residential properties?
I don't really know because it's not that we select what's going to happen. It's more of what happened afterwards. The reason it was shifted to the commercial properties is because they went up 500%. Obviously, that's a bigger shift to the commercial properties. I don't have a crystal ball. I don't know what's going to happen in the future. If residential properties continue the way they are, maybe it would shift back, but right now I wouldn't say, what the equilibrium is. It's not a selection of what's going to happen. It's just data.
On the borough's current rateable base, can you say what's the percentage right now that comprises commercial properties and what's the percentage that comprises residential properties? I'll expect you to have it.
I actually don't know offhand. I didn't look at it recently.
Well, is it safe to say commercial right now is more than 50%?
Probably not. I wouldn't think so.
I haven't looked at the numbers, and I don't know well enough to make the statement.
Okay. Another question. Somebody, maybe it was you just said, during the reval, you didn't get a percentage of visitations, people allowing you inside. Like, you're now going on reassessment with 20% of the town, and you're supposed to let you in.
Yeah.
What if they don't?
They don't have to.
Okay, then we prolong the issue of properties not being inspected. What is there a penalty for this?
It's not a penalty, but they could be penalized because if their assessment is too high and they believe that their assessment is too high, if they do an appeal, if there's no inspection, they're not going to be heard in their appeal.
Okay, well, I would think, maybe you earlier made the comment about this non-inspections, that COVID was a factor, probably was some of the factors.
We only had about 50% entry during the whole reval. we'd like to see a higher amount. There's no,
50%.
yeah,
And see, I get that letter in the mail, and I'm thinking it's almost my obligation as a citizen to let you guys in, and you're telling me 50% of this town's bunch of stop loss.
in 2 years ago, a lot of people were very concerned still about COVID.
I
It was still the beginning of 22.
I think you're right that COVID was a factor, but I think there was also a percentage of people that know that they have improvements that they can get permits for, and they don't want to get taxed. There's at least a price.
Yeah.
Which is why you wouldn't want to wait 10 years.
And I wanted to say, in some towns, what they do, if you don't get an inspection, they add things purposefully. They tell you they're going to do it. And so that way you get a higher assessment on purchase. I particularly don't believe in that practice and have not done that or told my inspectors to do that. But it's legal to do, and many assessors do that. And they do it so that you will let them in.
I'm not in the initial inspections on the other 80% this year. So I know you were commenting on this earlier, it's sort of fuzzy to me. So how are you going to judge whether my assessment should be adjusted up or down, since I'm not being inspected?
Well, you perhaps did an inspection 2 years ago, so I have that data. But regardless if you did an inspection or not, I have data on everybody's house. I have potentially what their house is. And the interior inspection, the difference that it's going to tell me is the condition. It's going to tell me if you have a finished basement, that maybe you have one I don't know. That's going to add a nominal amount. That maybe you finished attic and I don't know. Those are the things that aren't going to be correct. Maybe you have a bathroom that I don't know about. Those things are going to affect it, and if I don't know that you have those things, so you're going to pay less than everybody else because you didn't let the person in. But generally speaking, I have data on everybody's house. From if it sells, I collect stuff off the internet about people's homes. I get things all the time from their listings, whether they do an inspection or not. I do research. I research a permit. I do things like that. So I'm going to compare whatever I have about your house. I'm going to find as many similar houses as I can and compare what they sold for this year and decide what your value is based on those factors.
Okay. Just a couple of questions, a couple more, and I'll sit down. We were saying that the revale cost the town about $300,000. We're saying we only got into half of the homes, or help half the problems, approximately. So does that mean if we would have gotten into more than 50%, it would cost us more, or did it cost us $300,000?
It costs the same no matter what.
So if we get into 10%, it still would cost us $300,000.
Yes.
Okay. I just had one last tax-related question, really not related to the assessment, but I'm asking anyway. I know there's a bunch of appeals filed at the state level, a lot of apartment complexes and towns on commercial properties. Do you have any projections on how much in rateables we might lose from those tax payments? I mean, I know you can't comment on the individual cases, but I would think tax assessors as a group have a formula like, okay, if we have $2 million being challenged for the rateables, we can expect to lose 10%, 5%, 4%. Can you say what? And the reason I'm asking this is because I talked to Carolyn Benson today, and she was saying anybody that gets a reduction, they're going to get a credit on their future taxes, and then the tax base gets lower, which also means more taxes from us. So I'm concerned, having experience with tax appeals in the past, that if these tax appeals, even the majority of them go the wrong way, it's going to be more money out of our bonds. Can you comment at all about that?
I believe that most of them
It's a form.
are not going to be successful. The rest of them, most of them haven't come to a court case yet. I know, I can say a couple were settled today where they dropped both years that they were appealing. And I mean, we may lose some on the apartments, but the thing is that it's not to say that they may have been adjusted next year anyway because of the current conditions in the market. The biggest thing being that the interest rate is up. inflation. Their expenses are up. So therefore, when I do a calculation on how they are, the value is determined on the commercial property, they may have dropped a little bit because the expenses are up and their income is about the same. But, so, it all, I mean, I don't know where the value of the town's going to come out next year. I haven't really started the evaluation. I'm still doing the inspection. As far as the tax appeals go, so far, we haven't lost anything on any of them. We're fighting them. And I think we'll be successful.
All right, well, we haven't lost any cases, but you said there were settlements, so it seems to you...
They withdrew.
They withdrew?
Several today actually withdrew.
They
Speaking
withdrew.
to
Okay. So far, out of those
20.
20, okay, there's been no loss in rate?
Not yet, no. Correct.
And there's 20 still pending?
Well, there was about 20, and they just started coming through today. I know 2 of them are going to drop the withdrawal, their appeals, so I don't know how the rest are going to go. I mean, I've looked at them. I think the reval company did a good job, and we're going to defend the value.
All right, thank you very much.
Okay. Anybody else?
Bruce Sanders, 7th Avenue. One comment to the council. I don't believe there's anything on the website that I saw of the name of the company that's...
We're not using the company. I'm using in-house inspectors.
Okay. The only reason why I ask who that is, it would be a great way to case houses. Go around there.
So the inside baseball on this is that I got the inspectors from the company that we use for the reval, but I'm using them in-house as in-house inspectors rather than hiring that company.
Okay.
The company that we used, their price went up considerably to a lot more than what we paid for the reval per line item, and I'm getting them for a lot less than they would have come in if I had hired the whole company. So, and what that also requires is that it's a lot more work for me because instead of the company doing a lot of the footwork, I have to actually do it.
Okay. I was just concerned because it'd be a great way to come in.
They
Look at the house. They have no...
They do have IDs. They do have IDs. They have been vetted out, and they do also have the same CTA qualification that I have, all of the inspectors. So if they did something that they weren't supposed to do, there would be consequences. They could lose their regular jobs also, their state certification as well.
Thank you for the clarification on the 80%, because I was wondering how you mold that in. We discussed that. I think that's important to understand that, you know, it kind of spreads it across everyone. So I think that's important. The other thing, you mentioned about waiting 10 years, and the point here is that if you waited and something drastic happened, like a flood, would you have floods here? Maybe explain what can happen to the borough.
It exactly happened in Manville. They did the reval right before Irene, I think it was, and the older one.
Oh,
Irene.
I talked to you about in 2010.
That's Irene.
They did the reval right before that in 2009. I guess Irene was, I think it was around, it was before 2010, but it was around that time. The point is they did the reval the year before that happened. The whole town, there's a section of Manville, they call it Lost Valley because it was completely flooded and wiped out. And those values had to stay on the books. And what resulted in 2010, 2011, 2012, about a third of the town appealed in each of those years. They lost in tax revenue, just the municipal portion, over $400,000 in each of those years. So because they did not do a reval, they didn't even call for a reval. They just kept the numbers on the books. And that's what happened. And it was very, really, really hard for the town. They're still recovering now, which is, you know,
15 years
later, 10 years later. Because there's not a lot of ways to change the assessments without a rebound or some system in place that's already there.
Thank you for your time.
All right, thank you. All right, Frank, 2 minutes.
Frank Bryan, 303 Maple Street. I got to throw a little levity on this situation of taxes. You can see the way I'm dressed. I just left Home Depot in case there's any tax increase. I have the money to pay for the taxes. And if I Dave Polakevich, he's going to have 5 bathrooms. I like your answer. Add 5 bathrooms to his house. Automatically, right? He'll try to cut it back. He only has 1 bathroom, but he's got 5 or 6. So, listen, I left Home Depot. I'm hoping my Carnahan comes across with a little money that I'm losing now, because I know this guy next to me is not going to cough up any money by the time I left, right? So, but seriously, I want to say we're here for Amelia and Bob. That was the night. And I say Amelia first and Bob second. And the town appreciates their hard work. They volunteered. They weren't forced to do things. Bob didn't, maybe he was forced to become a but we're grateful. The town is grateful for what they've done, and they wanted to do it. And Bob's little speech was important. Everybody has to step up. Everybody up here, we're not going out to dinner every night, but you become acquainted with everybody. Is that your phone? I'm in the middle of talking. So, by getting out and volunteering, you get to know everybody. Coming here tonight, you get to see this woman's face. So if you have to come and see somebody, there's a face behind just an 800 number. So, again, for Bob and his wife, we're grateful. The whole town is grateful, and it's nice to have you guys honor them. Thank you.
Frank,
I 6 bathrooms on the way down.
Yeah, my name is Rich Thomas, 109 Green Avenue. I just have a question. You said you have data on everyone's house. Suppose there are 2 families living in one single-family house. Is that reportable? Or concerned about children in the school system, things like that?
It's not really my purview. I assess what's in the house, not who's living in it. I don't know if seniors are living in it. I don't know if kids are living in it. I don't know really about the situation of what's happening. That if I personally went into a house and I saw maybe a bad situation or something, I would just come to the code enforcement and let them know. But it's not necessarily, it's not what I'm looking for in my job. I mean, just as a concerned person, if I saw something, I would probably, let the town know, but it's not what I'm looking for.
Okay, all right, thank you.
That's it? Anybody else?
I just want to make one other comment. I'm not assessing the houses. I'm not raising the assessment to try to get more money for the town. I'm not lowering it to give someone a break. There's only a part of the piece of the pie, and just trying to make it equitable for everyone to have their, pay their portion of the pie. The town isn't having a reassessment to grab more taxes. That's not how, it's merely an equation. If they want more taxes, then they vote bigger budget. That's how you get more taxes. It's not, they don't take on, jack everybody's assessment up, that's how we get more money. It's not how you get more money. It's just how you split up the pie.
Okay, anyone else, any other questions for Dawn? Dawn? Wonderful, thank you. We're gonna take a quick break right now before we go into the rest of the agenda. For those of you that don't want to stick around for the rest of this, outside of that, feel free. We're going to reconvene in about 3 or 4 minutes. Thank you. Introduction tonight.
Okay.
Yep.
We have ordinance number